and welcome to Market Insights. I am Lavina Emma. So today we're going to be discussing the cryptocurrency and the potential impact of Ethereum ETF approvals. Now, the approval of Ethereum ETFs by the United States Securities and Exchange Commission has been a highly anticipated event in the cryptocurrency market. As you know, Ethereum is the second largest cryptocurrency by market capitalization. It is a blockchain platform that powers various decentralized applications and smart contracts. So what will be the impact on cryptocurrencies? Now, with ETF approvals, this could bring more mainstream investors to the cryptocurrency market, potentially leading to increased liquidity and stability. This could benefit the entire cryptocurrency market, not just Ethereum. And also, it also leads to a wider adoption by institutional investors, which will also lend more legitimacy to the cryptocurrency space. So on today's show, my guest and I will discuss how the Ethereum ETF approval will impact global finance and what lessons Nigeria and the African continent will learn. So my guests this morning are joining us. I have two guests, and they're joining us virtually. I have Webb Hammond. He's the head of growth for Second Mountain. It's a crypto research company. And I also have Geoffrey Neto. He's a lawyer and a crypto investor. So welcome to Market Insights this morning.
Good morning. Good morning. How are you doing today? I'm joining you guys from USA, and looking forward to talking to you as far as what's going on with the Ethereum ETF, how it's going to change the industry, how ultimately it's already getting part of topic of conversation here. We have the U.S. election coming this year. Cryptocurrency is going to be front and center as far as a lot of the debate that happens there. Politicians are already coming out more or less displaying their stance. You have the Trump verdict that came out yesterday. Maybe we could touch that a little bit. That's definitely a spicy topic. But yeah, thanks for introduction. Thanks so much for having us on, and we're looking forward to talking to you.
Okay, that's good to hear. And welcome to the program, Geoffrey Neto.
Thank you. You're welcome. Yes, good morning. I'm looking forward
first of all, let me start with Webb Hammond. Now, what are the potential implications of Ethereum ETF approvals for the global cryptocurrency market?
Sure. So I'll take this one. So the benefits really are clear, right? There's going to be increased liquidity and accessibility as far as Ethereum markets. Whenever you have an ETF come available for an asset class, really what it does is it opens the door to a different kind of investor, a passive investor, a set it and forget it kind of investor. You get access to retirement accounts that are less liquid, less likely to sell a position. They're more likely to have scheduled buys. They're more likely to ultimately be institutional buyers. Think retirement accounts, think social security management of basically like funds, and what it comes down to is it matures the market, right? It matures the price action. Ultimately it raises the floor as far as what the bottom of any sort of downturn in the market is going to be. That's really like the upside, right? Mainstream acceptance. When you have an ETF, you had the ETF for Ethereum come through, right? It's basically the stamp of approval, right? You have the government saying, all right, we basically defined what kind of asset this is, such that we can now format it into a structured fund, and so it's quite clear, now that we push this ETF through that Ethereum's here to stay. With the Bitcoin ETF, that was obviously a big catalyst in the crypto industry. It really got the market back and excited, and have a bit of a taste for the cryptocurrency scene a little bit more. And now with the Ethereum ETF, we're going to see a little bit more of that. It's going to keep developing. There's always risks with the cryptocurrency industry in the sense that there's market volatility. Speculative bubbles can form, but that's all asset classes. It's not like it's just core to cryptocurrency. We have it in more what's the word I'm looking for? It's high volatility in crypto in the sense that the markets trade 24/7, 365. Emotions run high. There's potential restrictions, as far as what countries may or may not already be on the bandwagon. But that basically rounds up the scene as far as what it means for international finance and how ultimately it's adding credibility to the smart contracts and Ethereum ecosystem.
Okay, well said, Mr. Webb Hammond, well said. Okay, let me move to Geoffrey Neto. Geoffrey Neto, welcome to Market Insights. You're joining us live from Abuja this morning. Geoffrey Neto is a lawyer and a crypto investor. So let me start with you. Welcome to the program also. Now, can you just give us an overview of how cryptocurrency is shaping the global economy right now?
All right, thank you very much. So thank you. Can I be heard? For me, the cryptocurrency is we're very excited that we're getting a lot of framework and legislation. Say the ETF has come to restructure the cryptocurrency space from an informal framework. The very good thing about where we are at the moment is the financial system and the cryptocurrency. We would like not to just restrict ourselves to cryptocurrency and the blockchain system, which I believe will be very general population of the world.
Okay. Okay, there seems to be a bit of a technical hitch there with Geoffrey Neto's network, but we'll be connecting with him shortly. Yes, okay, Webb Hammond, can you hear me?
Yeah, I can hear you just fine.
That's perfect. Okay, like you said, yes. Okay, so how can we create a wider adoption of Ethereum ETFs by institutional investors, and what's going to be the impact on traditional finance? But let's just start with, first of all, how could a wider adoption for Ethereum ETFs be adopted by institutional investors?
Sure. So, ultimately, now what integration looks like is, regulatory bodies and key opinion leaders in the space need to take a strong, hard look at ultimately providing a regulated and familiar system for how now you adopt the technology, right? It needs to be clear, but also it needs to have a good product market fit. So, part of the problem with compliance and ultimately dealing with regulators in the crypto space is that the question a lot of times isn't how to comply, but the question is what to comply to, because there's such a mismatch between ultimately the regulation that comes through and the actual state of the technology, because it's not like you can write laws that operate and control the flows of cryptocurrency exactly like we do with our traditional monetary systems, because by nature they work differently. The blockchain technology is never going to be the same as a digital dollar or something like that. It's just simply not, because the controls and the limitations that we do when we implement a cryptocurrency, everything's enforced. It's just simply different from a foundational perspective, and people come into market with regulation for it need to be able to digest, need to be able to understand actually how it works, so that and honestly to start a two-way conversation with strong industry representatives as far as what can actually help the industry go forward. What are the gaps in terms of how business is done now and how protections are in place for consumers and producers in the marketplace. So there's laws that protect both sides of the equation, right, that exist now. And ultimately it's like transplanting those to now the cryptocurrency technology in a way that's meaningful, in a way that's protecting of both sides of the equation, and also like the middleman as well, which is the cryptocurrency projects themselves. So, in terms of bootstrapping adoption, making it easier to use, right? It comes down to shrinking the knowledge gap, as far as the people writing the legislation need to be open-minded, start the conversation, be doing more of their own DYOR, as we say in cryptocurrency, do your own research. That's what the road to legitimization looks like. It looks like learning, it looks like open-mindedness, but also it looks like just being true to who we are as people, doing the best we can to make good on the systems that we have in place as a society culturally. Like we all have cultural values are unanimously the same, like globally almost, right? It's biblical to that point where the cultural fabric between us is quite strong. Okay, so we all want trust, right? Trust is the foundation of society, and regulation is really all about you're providing the framework for that trust to take place in the marketplace. And so if Africa or whichever country internationally is serious about taking the next step as far as getting blockchain technology and companies to take a look at their opportunities and countries seriously, as far as like where you're going to base your organization, or where you're going to have some of your capital management structures, or like ultimately that's what it's going to come down to. I hope that answers your question.
Yes, it does. Yes, it does. Well said, Webb Hammond. Okay, Geoffrey Neto, can you hear me now?
Yes, I can hear you. Is it better?
Okay, that's good to hear. Okay, so now, like Webb Hammond said, yes, this will lead to more options for people, not just the traditional financing system. They're going to have more investment opportunities, more, like I said, wider options for them. And traditional financial institutions, I want to ask for your thoughts on this now. Will they have to, definitely they have to adapt to this new change, and that means they'll have to offer more cryptocurrency related products and services. So what are your thoughts on this, particularly here in Nigeria with the rules and regulations concerning cryptocurrency? So what are your thoughts on this with this new adoption? Do we have to, our traditional financial institutions, do they have to adopt their services to expand and accept the cryptocurrency, what cryptocurrency now offers?
Well, yes, I would say the answer is yes. And very, very interestingly, we are at a point where you necessarily do not have a choice. You either reform or you retire. You either adjust or you move aside. The reason I say this is very simple. At this point, we would be having a lot of institutional investors looking forward to cross-border transactions. Can I be heard clearly? Yes. Okay, yes. So a lot of institutional investors will be looking towards engaging in cross-border transactions that perhaps will start in the US, but likely to end in Africa or in the countries that compose the continent. And if you do not have this kind of suite of products, such as the Ethereum ETF, etc., you're leaving a lot of money in the table. So for example, as you know, the Bitcoin ETF precedes the Ethereum ETF, and the Bitcoin ETF as a product, which has been approved by the US SEC, has had a cumulative value of $50 billion as a minimum threshold since the inception. And this is just for Bitcoin, which is just one asset class. You can only but imagine what would happen when we have the Ethereum ETF trading live and the impact on the entire altcoin market. So we really want to send this message to the continent, to Nigeria in particular, institutional investors and companies. Please get ready for this innovation. The innovation is here to stay, the disruption is here, and you must embrace it. We also expect an integration, just as Webb has said. We need and we would expect an integration of existing products, such as your retirement accounts, your pension funds, insurance benefits, and also the Bitcoin and the Ethereum ETF. So this allows the investors have a large suite of services and products that they can select from to mitigate their risks and also to spread their exposure. We also expect the SEC, just to summarize in this, as you know, we have a new DG of SEC, Dr. Agama, and he's a lover of the space. I just want to commend him for being forward thinking. We expect SEC to come in and bring in a lot of investor protection. You know, the consumer protection laws of the country and the continent need to be activated. And then we have a lot of safeguards to manage the market volatility that exists in the space. But as I said, we have no choice. We need to start as early as yesterday. Thank you.
Okay, thank you for that, Neto. Okay, yes, Webb Hammond. Now, I mentioned during their introduction that the United States Securities and Exchange Commission has just approved ETF, has given the Ethereum approval for Ethereum ETFs over there. So now, what's the regulatory environment like in the US for ETF?
Sure. So the regulatory environment in the US for ETFs, essentially it looks like, let's say you want to make an ETF. Well, you basically register with the SEC, and the access to that at this point is it's not really it's quite high, right? You need a lot of capital at disposal. You need ultimately, it's not an easy game to get into. So it takes quite a mature asset class and quite a mature industry revolving around whatever is being structured into that fund to now get basically the SEC stamp of approval, right? There's a reason that it took this long. It's not something that they do lightly or quickly or any of that, right? It's a very controlled process. It's not a very open process. And part of the reason why I think it took so long is because, again, like the mismatch between these systems, right? The nature of cryptocurrency is like access is at the floor. Every system is permissionless. You show up and you hook up. You basically connect programmatically with your smart wallet, your cryptocurrency wallet, whatever it is. And now it's basically interfacing with the smart contract that's on the blockchain. In terms of access, right, that's at the floor. In terms of access for an ETF, that's at the ceiling, right? You have to be a major entity. You have to have a lot of capital at disposal. You have to have a lot of legal support. It's not an easy thing to get into. It's not a cheap thing to get into. It's in crypto. That's part of why working in the cryptocurrency industry is so exciting and so meaningful, right? Is because it's taken these products and services and the way that the business is done now, and taking it out of the hands of the gatekeepers, taking it out of the hands of the big fat bankers. We have a saying in America that pigs get slaughtered. And quite frankly, the bankers here, they're pigs. They're fat. They're lazy. They don't want to change. They don't want to innovate. They want to keep the gravy coming. They want to keep their structured contract agreements. They want to keep their international, basically monetary flows that they have locked up. They have pinned down. They're not going out of their way. In a lot of ways, maybe they're at the end of their career or the end of their professional development. And not to say that there aren't people that are forward thinking and thinking about how to ultimately transplant whatever they're doing into the space, right? It's just more in terms of, right, the access to in the process to create an ETF is complicated, and quite frankly, that's I guess to the point of your question is that it's not easy. And ultimately, that's what it comes down to. So maybe that rounded up your question there.
Okay, but my point is that right now with this approval by the SEC, I'm sure with all the regulations, that means they understand, that's the United States SEC. They understand better how Ethereum ETFs work. That's why they have given the approval. And that means everybody has to change. The traditional financial institutions have to also change the usual way of doing business, because now they have to ensure that the services they offer right now can also expand and adopt cryptocurrencies and ETFs right now. That's where I was looking at. And in addition to that, there will also be more people will be investing, and more people can also use that digital currency. That's the point I was trying to get from you. I just wanted to get your thoughts on this, Webb Hammond, before I move to Geoffrey Neto.
Sure, sure. So, when it comes to this Ethereum ETF coming to market, right? And I spoke a little bit on the stamp of approval and what it means. The ETF has been approved by the SEC, meaning, all right, Ethereum has been basically approved by the SEC. And that's really what it means, more or less. And so now that Ethereum is approved by the SEC, now corporations are now going to take a more serious look as far as, all right, what does our Ethereum strategy look like? And I can see the boardroom conversations unfolding now as you have the 60 and 70-year-olds like, what? I'm going to have to learn what? But that's basically what it is, right? Is now all these boards and key opinion leaders in major corporations in the U.S. are now being forced, against their will to take the big hard step down the rabbit hole. Basically, probably setting up their first cryptocurrency wallets. Like I just know how it is here, right? Where the culture is just that, we're so entrenched in the way that we were doing things, and part of it is validated in the sense that the reason that the United States is such a trusted and meaningful member to international finance is that we've been here, we've been the market makers, we've grown our trust, on an international level. And say what you will about the United States of America, I know that we don't have the best reputation everywhere, but I mean, markets don't lie, and they set themselves. So the fact that we're the main player in international finance is not like some big mistake or a coincidence. No, it's just the fact that's been our game. We've been contributing it to for decades and decades and decades. And frankly, if we want to keep doing that, then we need to open the door as far as like, all right, so now how do we start this conversation? How do we continue this conversation of ultimately bringing cryptocurrency adoption to the next level?
Okay, thank you for that, Webb Hammond. Okay, let me move to Geoffrey Neto. Now, I've seen that this is a good development for the cryptocurrency industry in the United States of America. Now, moving on to Nigeria and looking at the African continent now, what lessons can Nigeria and other African countries learn from this development in regard to how regulators can create a very good environment that could foster responsibility and more cryptocurrency innovation?
Oh, wow, wonderful. For me, there's a lot of lessons, and very thankfully, this disruption or this innovation has been led from God's own country and the United States. So we can say there's been like a heavenly and commercial endorsement of the asset class, if you want to put it that way. But the lessons I think that exist for regulators at this point is one will be the first mover advantage. As you can see, the US did not just move because they wanted to move. There's always a commercial battle in the regulatory financial systems of the world. Asia was also in the process of moving ahead of the curve. As you know, this has also been approved in Hong Kong. And we're looking at what's happening in mainland China, etc. So the US has taken the step to say, with every innovation that exists within the financial ecosystem, we will be number one. And now the question for the African continent would be, who would lead the charge? And for me, this gives a very good platform for two countries. South Africa is very forward looking, and Nigeria is also rising up to the occasion. From the citizens' perspective, people like me and many others have said, we stand here despite the challenges and issues, and we think that governments and regulators need to come into the mix. So for me, what lessons do they have and what can they do? I think this gives framework. The regulatory frameworks as used in the US for the ETF and the Bitcoin ETF and Ethereum ETF can be imported. We can have regulatory importation of framework, which would help us take decisions faster. This is a market, and please, if regulators are listening to us, this is a market and ecosystem where there is premium on sense of urgency. We cannot use the normal regulatory slowness and bureaucracy for which we are known. So I think framework would be very helpful, and we should not import this framework fully. We need to adjust it to our local sentiments, our local realities, and the things that exist. I also think another lesson will be collaborative approach. Collaborative approach in the sense that we should give a handshake across the border. There needs to be jurisdictional handshake. The US, you've done this before. Can we collaborate in doing this in our country? And that collaborative approach will lead to creativity and more prosperity for the people. I also think of other lessons for the regulators and the country and the continent will be technology transfer. Now, the very good things about the ETF is it is built on technology. There is little or no manual intervention in the process. And if we can have this technology transfer across countries, continents, we would be able to do transactions faster, amongst others. And then lastly, if you ask me, is risk management approach. Because of the volatility of the space, because of the bad rep it gets once in a while, as you know, in the past 48 to 72 hours, a very, very popular Nigerian musician has been in the news for mixed reasons. I won't mention the name, but we can take some risk management approach from the ETF approvals in the US and import into Nigeria and Africa, and then begin to use this in such a way that we protect the citizens, the young, the old, the elderly, the struggling, the successful, the aspiring like myself, from market challenges and ensure the shared prosperity is the outcome. So for me, these are the lessons for regulators and the markets within our own space. Thank you.
Will this approval of Ethereum ETFs lead to price manipulation by large institutions, potentially creating a bubble in the cryptocurrency market? And this is for Geoffrey Neto, first of all. Let me start with you.
Well, if you ask me, I would say yes and no. The truth is capital goes where there is opportunity. And that's why we know that the Bitcoin and now the Ethereum ETF provides an opportunity for diversified investment opportunities. As you know, using the Nigerian stock market, for example, I'm someone who is exposed across markets. I have portfolio in the Nigerian Stock Exchange, I have portfolios in foreign exchanges, and also then in the cryptocurrency space. And I'll tell you, just as you know, in the stock market in Nigeria, we have a set of investors we call portfolio investors. And to put very mildly, these are really investors that necessarily do not come into your country physically, but they stay just as Webb in the United States, look at the opportunities, the fundamentals, and they send their capital your way to look for profit. So yes, with the Ethereum ETF, you would have a lot of investors looking for the opportunities for instant profit in the market. And, in blockchain and the cryptocurrency space, we have a lot of sniping, we call them snipers, and a lot of people who are just looking for quick wins. Yeah, so you would have that's happening. However, we know that the rules as laid down by the Security and Exchange Commission in the US does not allow for instant or crazy, in quotes, price manipulation. There's a lot of regulation and oversight on the market. And interestingly, to also add to this, it was not an approval given to everybody. Not every company, not every human is allowed to just get into the Ethereum ETF and trade as you like and head out, etc. Certain companies who have been verified and authorized have been given the approvals. So, for example, you have BlackRock, Grayscale. These are major global investment powerhouses that have close to $1 trillion of assets under management. And they also have their internal investment management approach and risk management mechanisms that have helped them over the decades. So the fact that we have very strong institutional investors, very, very high-powered investment firms getting into this market with the structure they've used across other conventional markets has helped in a large way to give the structure the stability. In fact, we can tell you for free that we have less volatility with the ETFs as we have in the natural day-to-day trading in the cryptocurrency market. So I would say this is a very great opportunity, and we will not have as much price manipulation. The price discovery will be managed with safeguards in the market, and it's really a good one. And companies, individuals should get involved as possible. Thank you.
Thank you for that, Geoffrey Neto. Okay, let me move to Webb Hammond. So do you agree with what Geoffrey Neto said? Is this a yes and no for you, or just yes all the way in terms of price manipulation by large institutions and it will potentially lead to a bubble in the cryptocurrency market?
Sure. So, in terms of markets, in terms of investing, boom and bust is native, right? Bubbles are created, they're popped, they're destroyed. Markets have a natural tendency to flow from undervalued to overvalued to undervalued to overvalued to undervalued to overvalued and back and forth, so on and so forth. This is the nature of markets. So will we make a bubble? Yes. Now, to talk about price manipulation, the size of a market is greatly determinant of the ability to manipulate. So part of the Ethereum ETF coming to fruition now opens the door to larger investors, more institutional investors. Obviously it's a major stamp of approval, so that's going to cause capital to flow in. As more and more money flows into the major cryptocurrency products and projects and tokens, they become naturally more resistant and less manipulatable. Basically, the growth and maturity of these assets is natural defense against manipulation. Think about how much more money it takes to make Ethereum move now that the market cap is doubled in just a week since the ETF approval has been realized. Okay, so in terms of manipulation, it's not a major fear for major cryptocurrency tokens. Now, whenever money's on the line, there's always going to be people lining up to exploit the newcomers, immature investors. I'm not saying that this market is going to be different than old traditional ones in the sense that smart money is going to take dumb money's money. Like that's the way the markets work, right? Impatient investors get eaten alive by patient ones. And so, setting and forgetting a weekly buy order of an ETF is a it's a natural, safe. That's a very safe, low volatility strategy as far as, like, let's say you're considering a position in the cryptocurrency space. You don't want to buy it all at once. You don't want to sell it all at once. You want to have a long-term mindset. And in terms of short-term manipulation, again, as these tokens get more and more at scale, they get larger and larger, that effect becomes, minute, right? I mean, you figure within 2 years, we could be talking about a market that's 10 times the size. That's 10 times more resistant to price manipulation, in the sense that the market cap is now 10 times the size. Like, it takes 10 times as much money to move the market. And that really is the nature of blockchain cryptocurrencies, that it's an economy of scale. As it scales, all of these problems people are scared of, they evaporate. And yeah, maybe that clarifies for you. Or I mean, I feel like I echoed a lot of what Geoffrey said, but yeah, we're on the same page.
Yes, I can see that, and yes, that does clarify for me. So as the market increases, like you said, as it continues to scale up, all these issues and questions people have, yes, it becomes answered, and there are no more problems concerning these. Let me just call them like teething problems. They won't be there as the market continues to grow. Okay, let's talk about Ethereum mining. As you know, considering the environmental concerns concerning Ethereum mining, could ETF approvals increase sustainability issues within the cryptocurrency space? So let me just start with Webb Hammond first, then I'll move to Geoffrey Neto.
So perhaps actually you could rephrase that question a little bit differently. I want to make sure I understand it clearly so I can give you a good comprehensive answer.
Okay. Now I'm talking about Ethereum mining now. As you know, this is something new with regard to the ETF approvals now. So will it increase sustainability? Ethereum mining, is it going to increase sustainability issues within the cryptocurrency space? That's what I'm referring to.
Sure. So you say sustainability. I think that's in the context of environmental sustainability. So, in terms of environmental sustainability, I talked about economies of scale, and an economy of scale is such that as the economy scales, every element of that system scales as well. So as our transactional volume and throughput goes up, our transactional cost goes down. Transactional cost is directly relatable to compute, basically the amount of energy and computational power that it takes to secure all the transactions that are coming through actually goes down per transaction as you have more and more activity taking place. Now, part of cryptocurrency and technology in general is that by nature it's upgradable. You can continue to push and pull your edits and improvements to the system at will, ad nauseum, daily if need be. So to think that in 6 months time to 12 months time to whatever it is that we're going to be in the exact state of the game, the exact same state of the game, the transactions are going to stay the same. To think that it's going to be exactly as it is today is just, it's not the case, right? We're in a constant state of upgrading. There's new solutions coming to the marketplace constantly. Ultimately, people want to do their transactions as cheaply and as frictionlessly as possible. And that looks like sustainability, right? Because it's less energy that needs to go into the system to now produce the computation and transaction that then gets settled, right? And frankly, there's so many solutions now that are at pace or competitive rates to the traditional infrastructure that the simple state of Ethereum mining and the industry revolving around that is almost it's fragmented, right, to many different chains, to many different solutions. It's slowly going to be a situation of, all right, you want your transaction and certain assets to be on the Ethereum chain. Now, some of your listeners might not be familiar with how blockchain and cryptocurrency works, but ultimately, all of the assets are on chain. They're on, there's many different blockchains, but they all more or less are distributed ledgers. A ledger is basically just a record of balances and flows as far as like how your different stakeholders are moving and transacting with one another. And so basically you have a distributed ledger. So distributed meaning many different computers contributing to the network. And you have that ledger, right? And so you can have one ledger speak to another ledger. So if something is inefficient on Ethereum, eventually we'll be in a state of the market where all of the work is done over here, and then it simply gets reverted back to the Ethereum chain, in a most cost efficient and a most environmentally sustainable manner. It's very scalable in that way. Our technology all speaks back and forth with one another. If the solution or the tool doesn't exist for it to do so, then we can create it. Like there aren't bottlenecks in the sense that that it can't scale. There never will be, because the nature of the technology is like it's upgradable, right? We could tear it down and re-implement it tomorrow, and like maybe that would cause some kind of hiccup or some fear. But the point of the matter is that we could. If it becomes a true sustainability problem, and I'm not so sure that it is. I think that a lot of those numbers and metrics that are blasted out by some major institutions are a bit blown out of proportion. While I realize that like a Bitcoin transaction, you can go crazy in terms of basically how you now explain, the environmental impact of one of those transactions. But the point is that one Bitcoin transaction is one Bitcoin transaction, whether it's $1 million or $1 billion or $1 trillion, it's one Bitcoin transaction. So the way that Bitcoin transaction can scale is truly infinite, in the sense that how much money it can move is only determinant of ultimately how much money the people have. So I hope that answers your question a little bit.
That's Webb Hammond. Okay, let me move over to you, Geoffrey Neto. Now, we've seen all this from everything Webb Hammond has said concerning the regulations from the United States SEC. Now, so what policy impacts can Nigeria get from the United States of America, from the US regulatory body concerning Ethereum approval right now?
Yeah, so when you say policy impact, can I get more clarity in that regard? Hello?
What
I
the
cannot hear
regulatory
you.
body in the
Okay.
United States had to do to get this approval, how they had to understand how the market works. So now in Nigeria, looking at, let's just focus on Nigeria. We know how our exchange, our regulatory body here works, how they don't really understand cryptocurrencies yet. So they've been putting a lot of regulations there to perhaps just to control the market and to understand it better. But I just want to know from your own point of view now, if you were a part of Nigeria's SEC, our regulatory body, and what kind of policies would you suggest, learning from what the United States has done recently with the ETF approval?
Okay, wonderful, wonderful. What I would say is I would want to commend the SEC, the Security and Exchange Commission in Nigeria, and also commend the Central Bank of Nigeria, the CBN. So one thing they can do regarding public policy, I would want to use very simple language so we are all on the same page, would be first regulatory clarity. Prior to this time, the operators and the customers in the space do not necessarily know who we are answerable to. We wake up on a Monday to a ban from the Central Bank of Nigeria, yet we are engaging on Tuesday with policies and regulatory frameworks from the Security and Exchange Commission. However, in recent time, the Central Bank of Nigeria has put in writing that everything regarding digital assets, the management, the operation, and the framework stands under the legislative and regulatory purview of the National Assembly and by direct extension, the Security and Exchange Commission. So regulatory clarity would help in developing the space. Two, again, will be know your customer. You know, we use KYC very, very vaguely and very, very loosely in Nigeria. We believe that KYC would mean taking your address, your phone number, and the email. And for us in this space, it goes way beyond that. For you to create policies or frameworks for Ethereum ETFs, Bitcoin ETFs, you need to know your customer. And how do you know them? You interface with the operators in the space, you interface with the customers in the space. As I say earlier, the old breed without the young breed will breed greed. And you cannot understand this space except you hear from us, except you collaborate with us, except you create customer forums where we can engage and inform you how this can work and function. So we would expect the SEC and the CBN, while they create frameworks, do not create frameworks in rooms that have the nature of where I'm speaking, air conditioned, without intervention by operators, but create this frameworks and public policy in open air, where we give you very interactive solutions and creative advice on how this can fly. We would also ask that Nigeria should go beyond the ETF. If we only do what others have done, we would necessarily just get semi-direct results. We expect the SEC to go way and beyond. We need to do a lot of customer education, you know, make this go mainstream, inform the public about the risks and the benefits in it. We need to also go into what we call ROWA, real world asset tokenization. You can sell real estate through the blockchain. You can sell crude oil through the blockchain. We have a lot of mineral resources in Nigeria, and Webb from the United States of America can buy property in Abuja without leaving America. And this will bring in billions of dollars into the space. So Nigeria needs to go into real world tokenization of assets. And lastly, we would ask that when we are creating this policy, government should not look at revenue. Government should look at creating job opportunities. If you come into the space with the mindset of taxation, I saw $1,000 move, I need to take $200 out of it. Soon enough, you would not see any dollar move. The dollars will move without your purview, without your insights and all. So we expect government to look at us as an industry that is starting, give us pioneer status incentives, engage with us, and the policies will naturally be collaborative and prosperity will be the shared outcome for all. Thank you.
Okay, thank you very much to my guests, Webb Hammond from the USA and Geoffrey Neto from Abuja, Nigeria. It was a pleasure having you on the program, Market Insights, and I look forward to having you both again to discuss more on cryptocurrency. Thank you so much for joining me this morning. So that's our time for today's episode of Market Insight as we discussed the approval by the United States Securities and Exchange Commission of Ethereum ETF and what it stands, what it means, how it's going to impact global finance, and what Nigeria and other African countries stand to learn from this. So as Africa continues to explore the potential of cryptocurrencies, the lessons learned from the global markets will be crucial to a sustainable and innovative future. Many thanks for watching this program, Market Insights. I am your host, Lovina Emma.